Are you covered and ready for a disaster? We'll break it down in today's video. On December 30th of this past year, our local area experienced, quite frankly, a disaster, a tragedy, and something that became a huge wake-up call for all of the surrounding communities. As many of you may have heard, and it did make national news, on December 30th, our part of Colorado, particularly two specific towns, Superior and Louisville, two pretty affluent, well-to-do towns, experienced a major wildfire. And while the source of the fire is still being figured out, they have some leads, it was a couple of factors that contributed to this major disaster. One, record winds that day, record high winds. In parts of the Front Range in Colorado, they were experiencing winds at 100 miles per hour, including Louisville, Superior, and parts of Boulder, Colorado. That combined with the fire starting, combined with record dry conditions that we've had in our region. We simply have not had enough rain and snow, particularly the past few years and particularly this season. The unusually dry conditions combined with the high wind, when the fire started, wherever it started, it literally became wildfire. Over the course of a few hours, everybody watching in the Front Range in all of the local communities, we stood by horrified as what seemed like at first a small but containable fire spread quickly throughout these neighborhoods, destroying at the end over 1,100 homes and killing 2 people. So, as the community around us looks at rebuilding, as those in the surrounding communities, our neighborhood is only about 15-20 minutes away, and we realize how lucky we were because we realized if the winds had shifted, that could have been our house that we lost, just like that. So while today's topic is heavy, it serves as an incredible reminder that we have to take time to look at our insurance coverage. One of the aftermath, one of the fallouts that we're seeing now and hearing from different families, from different households, as they grapple with losing everything, as they grapple with a new reality that they literally have had their home burned to the ground, possibly their cars lost, everything they own, except for in some cases the clothes they had on the back because they had to run out of their house, didn't have time to pack. But what many of these families are dealing with not only is that shock of such a huge thing happening, but they're realizing now that they were simply underinsured. So let's talk a little bit about insurance policies, not only in homeowners, but in all aspects of your life. All insurance policies, depending on what aspect of your life, it really, really matters, and it is part and should be part of your wealth building strategy. So let's talk about a few high-level things you should be keeping in mind, particularly around homeowners insurance. One of the biggest challenges that we are seeing now, our area in Colorado has appreciated so significantly, as many other metros have over the past several years. So in addition to rapidly appreciating home values, combined with the way our economy is now, combined with post-COVID, combined with limited housing inventory, combined with inflation, combined with supply chain issues, we are seeing things like there are no other homes in the area. It's very, very difficult to find contractors to rebuild. Some of the waiting lists are 2, 3, 4 years long, and construction material costs are through the roof. We saw this last year, for example, with the rise of lumber, right? Lumber became incredibly, prohibitively expensive, dramatically raising the cost of many construction projects and renovation projects. So, one of the first things that we should look at as you review your own homeowner's insurance policy, look at the rebuilding costs. Have they changed significantly since you purchased the home? So it's very, very common when you're looking at purchasing a home, especially if you're getting a mortgage, and mortgage companies typically require this, but you have to purchase a homeowner's insurance policy in order to buy the home. So many homeowners buy a policy, check that box, and then move in and move on with life. The thing is that you have to take into account year over year, how has your home appreciated? How have homes in your entire area appreciated? What is going on in your local market? And then, does your current policy take into account things like rebuilding? So what we are seeing, unfortunately, in our towns that were affected with the Marshall Fire, we are seeing that If they do not have an adequate rebuilding cost worked into their homeowner's policy, they simply will not be able to replace the quality of home in the area that they lived in. They don't have enough insurance coverage unless they have other financial means, but their policy will only cover so much. So look at the rebuilding costs. How have they changed? How has your local market changed? Have construction and material costs gone up? And do you have margin in your policy to account for that? The next thing is, have you done any major renovations or updates to your home since you moved in? So again, it's common to purchase that initial policy and then you move in and it just is kind of one of those things in the background. But perhaps you installed a new fireplace. Perhaps you did a room renovation, maybe a kitchen renovation. Perhaps you added a new structure, maybe expanded or built a garage. What we're seeing a lot in Denver is people popping the tops of their bungalows to create an entire second floor or even third floor. When you do major renovations and upgrades, have you reviewed your homeowner's insurance policy to reflect the increase of the quality of the renovation, again, into your overall policy? Next, when you're looking at your policy, think about your geographic location. So I grew up in the Florida Panhandle, which is known for hurricanes. Now, local homeowners insurance policies will typically reflect the needs of the area. So for example, growing up in hurricane country, everybody had flood insurance, right? Of course, and it was it was common knowledge, everybody had flood coverage. But in 2004, when Hurricane Ivan ripped through my hometown and destroyed thousands and thousands of homes, where many families were caught, unfortunately, in a terrible position. They had an adequate homeowners insurance policy. They had adequate flood coverage, but they didn't have additional rider policies. So a big one in Florida is wind policies. An insurance company can come in and decide this damage was caused by wind. And if you didn't have a wind rider in your policy, you weren't covered. That portion of the rebuild would come out of your own pocket. Every geographic location has nuances. California has earthquake coverage, for example. Other areas have floodplain coverage. But it's very, very important to work with your insurance company and understand, based on my geographic location, not only do I need the basic homeowner's insurance policy, but what are those additional riders? What else do I need to customize so that should a disaster strike, I am covered? Now, let's shift gears a bit. If you're not a homeowner yet, you're still not off the hook. You must have renter's insurance. Renter's insurance policies are incredibly cheap, and they cover the cost of replacing your personal items should something happen to the dwelling that you're living in while you're a tenant. Many landlords now require a renter's policy in order to rent from them, but not everyone does, and sometimes even if it's a requirement, it's not actually reviewed and looked for. It is your responsibility and on you as the tenant to obtain a policy that will cover the majority, if not all, of the cost of replacing your personal items. Don't let yourself get caught without one. And then finally, just a general reminder, it's a great time to look at your homeowner's insurance policy, but it's also a great time to audit your entire life. Look at other areas like your car insurance, motorcycle or toys insurance, for example, if you own a fifth wheel or a camper, health insurance, pet insurance if you have your furry friends, life insurance. If anyone else in your life depends on your income for their livelihood, such as a spouse, an elderly parent, children, you must have a life insurance policy. How has your life changed over the past year? Make it a habit to review annually all of your policies and ask, what has changed? Do we need more? Do we need less in certain areas? Do we need to refine our coverage to better reflect our current life circumstances? Work in an audit every year. We do ours every January. Life changes and evolves. That's part of it. And so should our insurance, all aspects of our insurance. A good rule of thumb, again, is to review this annually. So that is it for today. Take time, review your life, review your insurance needs. It is part of your wealth building journey, just in a different way. If you like the content that I'm putting out, ring the bell to subscribe below and tell me in the comments, what kind of insurance coverage do you have? Have you had any instances in your life where you've thought, wow, this is a wake-up call. It's time for me to look at this and make sure I'm covered. Tell me your experiences below in the comments. In the meantime, have a great weekend, and we'll talk soon.